sell out of their altcoins. And just recently, in April, Trump announced a 90-day pause on tariffs except for China, which is why we've seen a bounce in total 2, which is the crypto total market cap excluding Bitcoin's market cap, from about $835 billion, upwards of $1.06 trillion. But I'm going to get into the charts in a little bit and share with you guys what happened in the past around this phase in the market cycle and how it's playing out pretty similarly to what's happening right now. But this is what Trump said in regards to raising the tariffs on China to 125%. At some point, hopefully in the near future, China will realize that the days of ripping off the USA and other countries is no longer sustainable or acceptable, based on the fact that more than 75 countries have called representatives of the US, including the Department of Commerce, Treasury, and the USTR, to negotiate a solution to the subjects being discussed relative to trade barriers, tariffs, currency manipulation, and non-monetary tariffs. These countries have not retaliated in any way, shape, or form against the United States. So he authorized a 90-day pause and a substantially lowered reciprocal tariff during this period, except for China. And so like two bulls locked in by the horns, neither of them wanting to budge, the US or China. There's also another fight going on right now in the United States, and that's between Trump and Jerome Powell, because Trump has said that Jerome Powell is not doing his job. He's too late. He's wrong. He needs to lower interest rates, which is why he requested Congress to give him the ability to fire Jerome Powell, and that Jerome Powell should lower interest rates. Now Jerome just gave this speech, and here's what he said.
Inflation has come down a great deal, but has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen. Surveys of households and businesses, however, report a sharp decline in sentiment and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment.
So for another meeting in a row, the Fed has kept rates steady, and similar to what happened back here from like July of 2023 until 2024, where they just held the line. This is the number one thing that we need to see, is the Fed lowering interest rates, making money cheaper for overnight loans for banks, in order for confidence to really come back to the crypto market to push prices higher. So regardless of all of the bullish news that's taking place with pro-crypto policies, a pro-crypto friendly SEC chair, a pro-crypto president, that is still not enough to move the markets. So I'm going to dive into two other main things that need to take place in order for your altcoins like XRP, XLM, Bitcoin, Solana, SUI, HBAR, etc. to do well. But listen to this.
That we have some very big announcement to make. It's not about trade, it's about something else, but it's going to be a truly earth-shattering and positive development for this country and for the people of this country. And that'll take place sometime within the next few days.
And so could that announcement have to do with the Senate voting on the Genius Act on Thursday? Passage of this act would be bullish for stablecoin clarity, including Ripple stablecoin RLUSD in the XRP ecosystem, all at a very pivotal point right now for the altcoin market. Because if we look at the total 2 chart on the right-hand side of the screen, it just excludes Bitcoin. So this is Ethereum and everything under it, compared to total 2 on the left-hand side of the screen, last bull run cycle, paired up with Bitcoin stock to flow rainbow indicator. You guys can see that when we transitioned from orange to yellow in Bitcoin stock to flow rainbow indicator, the markets erupted to the upside. Now, it wasn't as big of an explosion as everyone was expected compared to last bull run cycle, because you guys can see when we went from orange in August of 2020, we saw this little sell off to 120 billion. We worked our way through this range right here. And once we transitioned to yellow, we absolutely exploded to the upside, upwards of $1.5 trillion. And that's where we saw the major sell off in the market after Bitcoin broke out past $60,000. Then altcoins pulled back nearly 60%. And so on the right-hand side of the screen, you know, we transitioned from orange to yellow, but the market's only rallied from 860 billion to $1.67 trillion, which is still a lot of money, but it's minuscule in the grand scale of the size of the stock market and other markets. But this pullback, nonetheless, was about 49%. And just recently, around the middle of April, we transitioned from yellow to light green. Now, what happened last time that took place? Well, as you can see on the left-hand side of the screen, the last bull run, when we transitioned from yellow to light green, we saw this initial bounce after that first major sell-off in this disgusting red candle right here on the 17th of May. By about the 31st of May, the markets had recovered to about $1.03 trillion. Then we saw another sell-off right here, about 50% back down to about $600 billion. And you can see multiple points of contact within this zone of support. Now, even several weeks into the green phase in the Bitcoin stock to flow rainbow indicator, we got rejected from this descending resistance right here, and we came back down for a third time before the markets broke out to the upside. So we are only a few weeks into this green phase, and we are right at this descending resistance right now. So this is a very pivotal moment for altcoins here, because if we do not break to the upside, this descending resistance to the downside back within this zone of support where we wicked off right here on the 7th of April, also before the breakout right here, it acted as a major zone of support, is about 20% to the downside for the altcoin market. So we are still in a technical downtrend. And until we see a trend reversal, the trend is your friend. Now, downtrend is just simply a series of lower highs, which we've been seeing ever since the 13th of January, and lower lows. So right now, the most recent high is the 28th of April, and it's still a lower high from the 24th of March. And it's definitely a lower high from the middle to the end of February right here. So in order to see a trend reversal, in my opinion, we need to clear like $1.25 trillion and hold it as support to get confirmation that we're going to see a major move like what we saw last bull run cycle here on the left-hand side of the screen. Otherwise, the expectations for the altcoin market to sell off back within this zone of support around $850-ish billion is actually extremely high. The US dollar has lost over 25% of its purchasing power since January of 2020. So every dollar you had is now worth 75% of the goods over the last 5 years. And that's not even the worst of it. The dollar has lost over 87% of its value since 1971. It suffered a cumulative 684% inflation. So let that sink in. A $1 item from back then cost $7.84 today. Now, if you weren't born in 1971, and let's say you're 30 years old or you're 40 years old, this is more important today than ever before because of what's happening now moving forward with inflation and the power of the dollar. So I want to put this in perspective for you because let's say, for example, you had $1 million saved back in 1971 in a bank account in cash. By March of 2025, you would have need to stash away nearly $8 million to equal the same spending power of $1 million back in 1971 because the total inflation rate from 1971 to March of 2025 being 689% averages out to about 3.93% per year. And it's actually worse than that because companies participate in price gouging where they blame it on inflation because it's the perfect scapegoat to charge more and pass on those costs to consumers. And this is just based on the basket of goods that they measure. There's certain things that have even worse inflation, like the price of the pump. So to break this down in a way that makes perfect sense, imagine you're a baby boomer who stashed that $1 million away, or even right now, let's say you're a millennial, you're Gen Z, and you stashed away $1 million in a bank account. You're not investing that into crypto. You're not investing that into real estate. You're not going to invest that into the stock market. Well, back in 1971, if you thought it'd be a comfy nest egg for retirement today, just keeping cash in an account, here's what's happened to your money over the years. Back in 1971, $1 million was actually a small fortune. You could have bought a nice house. You could have bought a few cars. You could have paid for all of your kids to go through school and college because student loans were virtually nothing back then and still had plenty left for a great retirement. But over time, the prices of everything, houses, groceries, gas, you name it, kept going up because of inflation and what the Federal Reserve has been doing. So something that cost $1 back in 1971 costs about $7.90 today. So if you didn't spend anything from that $1 million and you still had it in your bank account, it would still say $1 million. But what you can buy for that $1 million has shrunk dramatically. The spending power would be roughly $126,000 today. So that's not enough for the same house. That's not enough for the same cars. And had you invested that in the stock market back in 1971 in January, well, today, even with this recent dip, you would be up over 5,000%. That's a 50x. That $1 million would be at $50 million today. So if we see another pullback in the crypto market by the tune of 20%, then that could be the opportunity of a lifetime to accumulate as much as possible over the next few decades because of what I'm going to share with you in a little bit. Now, there's not financial advice. As always, go consult your financial advisor because crypto is very risky. It's very volatile. You could definitely lose money in these markets if you buy the peaks and you sell the dips, but volatility is the price that you pay for opportunity. And if you can't stomach short-term volatility and you only buy when everyone's getting in the markets, then yes, it's going to be difficult to make money in crypto. But if you're the type of person that can move based on math, numbers, and simple logic here, and you accumulate when everyone's afraid or everyone's getting out of the markets, then that's how you make money. Because as you can see right here, all the way back in 1971, there was massive volatility in the stock market. 73 to 74, we saw a drop of 44%. Then we saw the markets rally back up. And ultimately, since 66 all the way until 82, this was about 20 years of volatility. And then we exploded the upside because of what? Quantitative easing and the Federal Reserve printing more money, devaluing the dollar. So that's what I'm going to get into in a little bit for the other two things that we need to see in order for crypto to experience a massive rally over the next few years. But listen to this. Treasury Secretary just said The USA should be a premier destination for Bitcoin and crypto.
I want to touch on crypto. Yesterday, as I had mentioned, the committee held a hearing with House Agriculture, or attempted to hold a hearing with the House Agriculture Committee. Turned into a very important roundtable as well regarding digital asset market structure reform. So can you quickly explain how important it is for America to take the lead here, especially as we see China leaping ahead?
Yes, sir. We believe that the United States should be the premier destination for digital assets, and as members of this committee and the Senate are attempting to do, create good market structure around that, so that U.S. best practices are used around the world.
And that's really the point, right, is having American U.S. best practices to sort of set the pace for others to follow, rather than us trying to fill in the holes that others that may be created as others set that pace.
Yes, sir. And also that digital assets are an important source of innovation that will drive that can drive usage of the U.S. dollar around the world, as with stablecoin legislation. There is speculation that there may be up to $2 trillion of demand over the next few years for U.S. government securities from digital assets.